Alright, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Agung Zandra from the Financial Accounting Seminar Class of 2020. Would like to discuss and explain about my final assignment, which is the paper. The title is The Pros and Contrasts Towards the Use of Fair Value Accounting. So, I would like to explain this presentation by dividing into three main parts. The first is introduction, the second is discussion, the third is conclusion. So, I would like to explain the material as simply as possible as far as I understood from the material. So, let's go to the first slide. So we came to the first part is the introduction of the pros and contrasts toward the use of fair value accounting. So we can see that over time, our financial accounting already analyzed so many development standards, and also brought us into the interesting phenomena, innovation in our financial reporting. And actually, one of the change, the very major in all development of financial accounting is the change of the historical based accounting into the fair value accounting in financial reporting or financial statement. So, according to the Francis Skipper and Lev and Zarwin in 1999, stated that the change of the fair value to the from the historical based accounting is to save our financial statements from the steep gulf of the irrelevance of information performed by financial statements that prepared by management as a whole. So, this changing condition is also supported by the increasingly intensive situation of global economic expansion as well as the efficient market mechanism. So, as we know that from our book, from the Scott book about the accounting theory, the main topic of the book is actually the market, the mechanism of the market, the efficient condition of the market, which is related to the investment that actually prepared by managerial in form of financial reporting or financial statements to all users or investors or creditors. Now we came to the question about the fair value accounting, why it should be really important to replace the position of the historical based accounting. The first thing that I would like to explain here is that the fair value accounting seems more reliable. At first, it seems more reliable, and people think that the historical based accounting will very damage for the investment decision by the investor. So the fair value accounting is relied on the clarifying the real financial position and results of financial operations that might be opaque if we continue using historical based accounting. So, historical based accounting can also provide room and stage for management or managerial to do such thing in fraudulent action in the form of manipulation. So, this caused the historical book value of assets or liabilities to be considered less having a strong relationship with reliability and less strong relationship with the market value. So, this is why what allows management to manipulate profits and hide the facts of their true performance. So, in contrast to the historical based accounting, we hope that fair value accounting can measure and also disclose the value of assets and liabilities that is more relevant, but at the same time, we might not lack the value of reliability. Before we discuss more about the fair value accounting and replacing historical based accounting, we need to take our basis, which is the SFAC 1 and SFAC 2. So the SFAC 1 stated that the financial reporting must provide useful information to investor and current and potential creditor in the future, with rational decision making regarding investment, credit, and other decisions. This information must be comprehensive for the people that have understanding of business and economic activity and willing to learn the information that we serve as management or accountant. So the financial reporting must provide information about the company obtains and use its case, obtains loans and loan payment, as well as other distribution from resources to owners and about other factors that affect the company's liquidity and solvency. So the FSC one discuss about what is actually the use of the financial reporting prepared by management. Meanwhile, in SFC2, we can say that SFAC2 states that the main quality of the financial reporting is that the accounting information must be relevant and reliable. So this is the two keyword, relevant and reliable. Relevance. What does it mean by relevance? Relevant is the information is able to influence investor decisions and information that's stated to have high reliability if the information is in accordance with the actual situation and can be falsified by other parties. So accountants believe that if the financial statements are able to these two characteristics, then the financial statement will be useful in making investment decision, or we call is decision usefulness in financial reporting or financial statement. So the two keyword is the reliability and the relevance. Actually, the fair value is expected to support the relevance value, but we afraid that we can leave the value of reliability. So the pro and contrast towards fair value accounting is very intensive, because this side thinks that fair value accounting might not be reliable, and this side thinks that fair value accounting is very important as we need to save the relevant value of our financial statement. So this is actually the reason why International Financial Reporting Standard 13 legalized the use of fair value accounting by replacing the historical based accounting. So from the start point of using the fair value accounting to the development of fair value accounting, we actually face so many problems, so many cases, so many failures during the development. Actually, it's actually normal, but it's very damaged. It's very important for all of the business around the world by using fair value accounting. So for example, the problem of bank failures and market meltdowns involves fair value is as one of the cause of the crisis. So according to King in 2009, in fact that the United States Congress asked the Securities and Exchange Commission or SEC to re-evaluate or reconsider the use of fair value accounting in market, which is considered to help the acceleration of the case of the US financial system meltdown. So from the expectation that fair value accounting is more relevant and also more expected to be more reliability, in fact that the problem and the meltdown and the crisis is actually related and linked into the fair value as the method that used in financial reporting. So this is actually very contrast with the previous explanation talking about the use of fair value accounting by replacing historical based accounting, because it considered provide information and also at the same time it provide opportunities for management to manipulate their performance. So as explained before, International Financial Accounting Standard or IFRS resulted in increasing use of fair value across companies around the world. This change certainly has a very big impact on accounting reports where the fair value used in measurement is related to the management performance, of course, and this might cause crisis. So the pros and contrasts towards fair value accounting is very big. So this is why we need to discuss in this paper about the pro and contrast related to the use of fair value accounting. And now we came to the arguments from the pro side that's supporting financial accounting over the historical based accounting. So actually, as what I explained before, in brief we can say that the actual purpose and intention by using fair value accounting that replace the historical based accounting is to provide the value of relevance, but also not leaving the value of reliability. But the crisis, the problem, the economic meltdown that happen around the world is actually called linking with the fair value accounting. So what is actually the problem with it? So, but first, the pro side, there are 5 previous research that I got from the literature. The first is from the Barth in 1995 stated that fair value accounting will emphasize the incremental value of disclosures for securities and also derivatives, which is we realize that it's widely used by banks and also in insurance company. But is that really matter for the economic condition? Yes, because in securities and derivatives, the fair value is very, very useful. The second opinion is from Park Arrow in 1999 that they found there is a stronger relevance for available for sale securities and also derivatives, which is also related to the previous research. And the third, Evans, Hodder, and Hopkins in 2014 states that the measurement using fair value accounting may able to predict more strongly as well as forward-looking information which resulting yields balance sheet amount in the future. So it's more into the future oriented by using fair value accounting. It's very useful for the investor that want to invest their capital into a company. But from the Barth Clinch in 1998, they claim that the investors will value fair value as something that more informative over the historical book or historical based accounting. So they think that fair value is more informative for them in giving them prediction, in giving them decision, in investing their capital in the company. As well as Damianti in 2014 stated that he claimed that fair value accounting is considered to reduce the recognition of liabilities and expenses that tend to be high in financial statements. But what I want to explain to you that the further research from my previous explanation stated that there is a value relevance in the difference in the remeasurement of non-current assets that is also in accordance with the Australian Generally Accepted Accounting Principles or GAAP, and this research stated that also as well as research stated by the Lensman in 1986 stated that this study formulates that investors make an assessment regarding to the obligation related to the financial accounting using fair value. So despite of anything crisis, any problem that happened by the fair value accounting, we can say that the value of relevance that useful to the investor is really the retention of the fair value accounting. But another explanation is that we have to be realized that however there is a nature of uncertainty that makes conservatism is not simply ignored. The conservatism inherent in historical based accounting is replaced by prudence in line with IFRS. Based on the results of previous studies that I explained to you, we can draw the conclusion that the supporters of fair value accounting have strong reasons, especially from the ability of fair value accounting in predicting the condition of the company in the future. But fair value also supported by a very strong level of relevance to the market value. Still, it should be noted to all of us that it is important to maintain a balance between the value of relevance and reliability, that we need to maintain decision usefulness of financial statements for all of the users, especially investors and creditors. So despite of many arguments that support the use of fair value accounting, we may not ignore the fact that many people also deny or also reject the use of fair value accounting. So we can see that as we learn accounting, of course, we cannot separate accounting from the nature of capitalism, which emphasize identifying prices and calculating our profit as a company and also loss as investors need for their capital decisions. As investors or creditors and business partners rely on our accounting data for their judgments in making decisions for investment allocations, extending credit, and also evaluating the term of their investment. And another discussion that came to the contrast side stated that actually the reliability of fair value accounting is still questioned when the relationship between exit price and shareholder fair value is not fully valid. So fair value accounting certainly has good intention, yes, but fair value accounting will endanger if the manager is wrong in estimating the value of fair value. So this is what actually the pros and the motivation for the contra side of fair value accounting, why they reject this fair value accounting. So followed by the behavior of manager that seems opportunistic, they might giving the manager an opportunity to commit violations in the form of manipulations. So managers will have the opportunity to manage accounting value, which the aim of achieving expected revenue targets. So this is in accordance to the Benston research in 2008 stated that although SFAS 157 legally stipulates the use of an exit price, however the value in use and the enterprise are used in some cases. And the last explanation is that this opens up opportunities for fraud, which can endanger all parties. Of course, we realize that fraud is very, very dangerous for the running of company operations, that fraud is very likely to occur, such as determining the amount of fair value and market information that is actually not available at this time, and calculating the expected value of the market for the future values, as what I explained before, and also in estimating replacement costs. So the findings of the study that contra with the fair value accounting indicate us that those who oppose the application of fair value accounting claim that there is a lack of reliability of the information presented under fair value accounting. So those who are more supportive to the historical based accounting, or the person who contra with the fair value accounting, argued that the fair value of an asset or liability is sometimes still ambiguous. And when fair value is not defined with certainty, assumption and estimates is very dangerous and can be wrong in using the entry price, exit price, or value in use will be possible. So this estimation has an impact on the information presented that is still ambiguous. In short, we can say that it can be said the application of fair value accounting doesn't always have a good effect on accounting measurement methods, because the reliability value is decreased. Yes, the relevance is increased, but the reliability is decreased. So from the previous formula, we know that if the both value of relevance and reliability is not kept in balance, so our financial reporting will not be useful for all of the decision maker, including investor, creditors, and stakeholders. And now we came to the conclusion of the discussion that I already explained to you before. So from the foregoing explanation, we can see that the implementation, the application of fair value accounting is not always running smooth as expected. So the measurement that we use by using fair value accounting over historical based accounting actually reflects some problems, some manipulative actions that cannot be ignored from all of the companies. So this actually indicates us that the standard setters must continue to improve the supervision, to improve the development of using fair value accounting, and also to develop the evaluation in the application or the implementation of the fair value accounting concepts as expected to be able to overcome the current accounting problems. So from the first intention, we know that the problems that arise is caused by the historical based accounting replaced with the fair value accounting, but now still we came to the problem that arises from the fair value of accounting. So however, in its application of fair value accounting, it raised several problems: sensitivity to changing market and difficulties in determining profit and loss are the main reasons for opponents of the fair value accounting. Apart from all of the problems related to fair value accounting, we can see that fair value accounting has certainly advantage over historical based accounting, which is considered unable to present relevant information. However, relevant information must be balanced with reliability in order to maintain our intention to prepare financial statements, which is the decision usefulness to all of the users especially investors and creditors. So the importance of reliability is a matter of debate from the pro and the contra side. So if we just focus on the contrast opinion from both sides, from the pro and contra, it's not going to be useful for our accounting. So even though that the FASB or AISB or also IFRS is sure that their ability to estimate efficiently and be unbiased for the future by fair value accounting, this must be supported by market conditions. This must be supported by ideal market conditions, which in fact will always change and not will always be fixed for the future. So the uncertainty that related to our economical conditions make the fair value seems not really reliable according to the historical base accounting. So this makes the application of fair value accounting will not be implemented optimally if it continues to emphasize arguments from the pros and cons, but takes into account that the factor of the market conditions as the main support of the implementation of fair value accounting. So we can see that we may not leave historical base accounting because the value of reliable is there, but we might not just use the fair value accounting as a single measurement method because just the relevant is there. We need to keep in remind ourselves that the value of reliability and also relevance must be kept in balance. So the differences in market conditions that are based on the differences in social, cultural, economic, geographic aspect, of course, will always affect they cannot be ignored for the sake of the realization of their fair value accounting function as what we expected earlier before. So that's all my explanation about the paper. The title is the pro and contra towards the fair value accounting. I hope my explanations can make it understandable. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.